Hello and welcome to Bloomberg Quint. Hi, this is Nikki along with Yatin Mota, and we are going to be talking about Bharat Road Network IPO, 600 crore IPO, which opens for subscription today. In total, 2.93 crore shares have been offered, and the price band is in the range of 195 to 205 per share. The issue opens for subscription today and closes on September 8. Yatin?
We have been talking about road companies and the kind of positiveness that we are looking at the sector. Of course, the government orders, the government spending has been increasing, on the infrastructure space, and we have been joined by the management of Bharat Road Network. So, if you could tell us, what is the company all about, and what are the plans as far as money raised from IPO is concerned?
See, we are a road concession company, obviously focusing purely on the BOT projects. And the money that we are raising is to sort of look at growth into our business. One is to go and consolidate into our existing assets.
Right.
We have 6 assets, so we'll go and consolidate our economic interest there. And a portion of the capital would be there for inorganic and organic growth.
All right, Mr. Chaudhary, the second question that I'd like to ask you is about the projects. Are these all projects NHAI certified?
Well, out of 6, 5 are NHAI project and 1 is MP state project.
All right. Also, the other question is about the BOT, the business module that that the company has. Now, the company is present only in BOT project segment and lack the presence in EPC segment. Don't you think that makes for a risky business module? Also, given that there is a third-party involvement in construction of these projects. Your comment.
See, if we need to understand the whole format of this business. I mean, a developer business is very different from EPC business. So we don't see any risk in that. Rather, what we would have seen in the past and most of the balance sheet which would have gone under stress and the negativity that we have seen around the BOT assets was primarily because there was an EPC conflict at the project level. So a lot of could be cash flows had been upstreamed on the EPC balance sheets. So we do believe that yes, we are into a business, though we may have to go and sort of get a construction done from a third party. But we being at a corporate promoter, being into this infra space for the last 3 decades, I think we bring one of that as our advantage. We do believe that we have the capability of going and identifying sort of EPC companies from which we can get this construction done at a very competitive pricing.
Okay. In terms of the profitability of the company, we have seen there is pressure on the balance sheet as well as on the P&L. Do you think post raising money from the IPO, a substantial portion will go in debt retirement and probably the financials would turn around for you?
No, if as I said, what we have to do is we have to understand the whole format of this business. See, BRNL is a holding company which has 6 assets underlying. So all the cash flows resides into those 6 assets.
Right.
So it is important to see as to how those assets are behaving, because what you buy today, you are buying a sum of parts of all those 6 assets. So the P&L of those 6 assets are important. And the very good part is that today all our 6 assets, obviously 5 are operational, 1 under construction. So all 5 operational assets are cash positive, and that is what is important for us, because we will see into this format of BOT assets, PAT being negative in the initial years because
right.
of a higher depreciation. But what is important is how quickly you turn cash positive.
Okay.
And the good part for us is yes, all our operating assets have turned cash positive.
Okay, sir, talking about the growth drivers moving forward, if you could give us a flavor how the company will be growing. Of course, in the marketplace, we have a lot of road projects which are stressed, and there are a lot of companies in the marketplace which are willing to sell, strategic stake in the project, or probably the entire project is on the block. So, is the company in a position for growing the inorganic route, or do you think the organic growth is enough for the company for the next 3 years at least in terms of visibility?
See, you will definitely see a sort of a consolidation happening going forward, and that is where, as I said earlier, we had seen a lot of these BOT assets which has gone onto the EPC balance sheet, and that is where we will see that most of these assets moving out from there and getting onto a platform which is a developer platform, and that is what we intend to create, do going forward. And yes, that throws up a huge opportunity for us,
okay.
Both on the inorganic and the organic space.
Okay.
I'd like to understand your strategy going forward for bidding the projects going forward. I'd like to understand the model that you would follow, the pattern. Would you completely own these projects, or how would we go about with it?
Yeah, I mean, if you see going forward, yes, as a developer, we would want to have a 100% stake on all the projects that we go and bid for in the future. Both, when we look at an acquisition, that is how we look at the acquisition as well. So yes, going forward, our strategy would be to have a sort of 100% stake in all these SPVs.
Okay, and so one final question, at least from my side. On the debt side, what is the current debt on the books, and post the IPO, how do you aim to maintain your debt to equity?
See, if you look at BRNL balance sheet, then we are hardly levered at that, because we have 574 crores of our net worth, we have 150 odd crores debt, and the post issuance net worth would be 1174. So I think as far as that balance sheet is concerned, I mean, we are not levered at all. But yes, we have debt at the project level, which obviously is the format of the business. I mean, you raise that, you sort of create these assets, and over a period of time, with the cash flows, you retire that debt.
Okay.
So the final question from my side, the cost overruns for all your subsidiaries. We've seen a substantial overrun, and if this is the way we continue, this will have significant bearing on the financials of the company. Your assessment on that?
See, good part for us is that this cost overrun was mainly from an IDC, which is interest that we had to pay because of the delayed construction, which was again because of the land acquisition problems that we had seen. So we'll get suitably compensated in terms of extension of our concession period. So as far as we are concerned, those IDCs really doesn't sort of impact our P&L, because we do get equivalent sort of revenue coming up from the extension of the concession period that we'll get from the authority.
Okay, thank you so much, sir. And that was the management of Bharat Road Networks talking about the IPO and the company growth prospects. Thanks for watching Bloomberg Quint.